We are Group 19, and today we are going to talk about the active valuation for automobile industry. And our advice is to buy the stock of Toyota. This is our agenda. First, let's introduce the industry background. The automobile industry is facing increased price competition resulting from industry excess capacity, currency fluctuations, or other factors. According to the December 2017 report, the global automobile industry is estimated to have had excess capacity of about 35 million units. As a result, the automobile companies are not necessarily able to set their prices to offset higher costs or the impact of adverse currency fluctuations. According to the circumstances now, automobile industry is having a hard time. Evidence can also be shown in the data of gross margin across industries. As we can see, automobile industry has a relatively low gross margin compared with airline, railroads, computer hardware, and so on. When it comes to Ford, General Motors, and Toyota, it can be found that Ford and General Motors indeed suffered in recent years, but Toyota outperformed in both dividend growth and free cash flow. Next, we will have a more detailed analysis for Toyota.
Now, I'd like to talk about the financial statement analysis of Toyota Motors. From the dividend history, we can see that even though Toyota's dividend fluctuates with time, it still shows an upward trend. According to the firm's financial statements and relative materials, we assume that the firm is in a two-stage growth and predicted that the firm will keep growing at a rate of 5.34% for the next 3 years and then maintain a rate of 3.5% forever. Compared to other firms, Toyota's asset structure is appropriate and very close to the whole industry. Besides, its beta is relatively low, which leads to low systematic risk, low volatility, and low cost of capital. The trailing and forward PE ratio are respectively 15.74 and 14.93. PE ratio equals to 1.43. Investors may expect Toyota will have a higher earnings growth in the future. As for the fundamental value of the firm, we use 3 ways to value Toyota's stock price. 127.33 for the dividend discount model, 133.96 and 129 from free cash flow model, respectively, using free cash flow to the firm and free cash flow to equity. Those fundamental prices are all above the current price, which is now 122.28.
Now I would like to talk about market news. Recent market news promotes confidence on the economy. According to its financial reports on the first 2 quarters, Toyota said it saw limited impact from the steel and aluminum tariffs on its bottom line. For now, its operating margin rose to 9.3%. Solid sales performance in the first 2 quarters have also eased the market concerns. During the first quarter, Toyota achieves investments estimation in both earnings per share and net income. And about management discussion. In the financial statements, Toyota has a bright outlook from the macro perspective. Major economies, including United States, European Union, and emerging markets like China, all experience enhanced consumer spending or recovery under economic stimulus. The automotive industry was also under impact by these economic trends. In Japan, demand expanded with introduction of new models. The sales in emerging countries as a whole also expanded. The consumption in resource-rich countries has also been gradually increasing. And as a side effect by the trade war, Toyota needs to address transaction costs. However, it can take advantage of global production facilities to significantly reduce the risk level. Localization productions enables purchasing of many supplies and resources used in the production process, yielding a better match of local currency revenues with local currency expenses. In addition, Toyota enters into other hedging instruments to address a portion of its transaction risk. This has reduced the effects of foreign currency exchange rate fluctuations in the past years. So with all the above analysis, we would recommend buying Toyota stock now.